So we'll start with the session, sir.
Yes, sure.
Okay. Okay, sir. Sunil, sir.
Okay, sir. Thank you, sir.
Okay.
The capacity to learn is a gift. The ability to learn is a skill. The willingness to learn is a choice. Good morning, one and all. Thank you for joining us for the second day of the webinar. I'm Sunil PR, Assistant Professor. Takes this honor to invite the speaker of the day, Mr. Manjunath N, Assistant Professor, Government First Grade College, Bangaru Tirupati, Kolar, and all the dear participants to this session. Now, I request Mrs. Rashmi K.A., Assistant Professor, to introduce the resource person for the today's session.
It's not resource, but resourcefulness that ultimately makes the difference. Good morning, one and all. I am Rashmi K.A., Assistant Professor, Department of Commerce, Jnana Evening Degree College. I am profusely overjoyed to take the opportunity to introduce the resource person for the session. Mr. Manjunath N, Assistant Professor, Government First Grade College, Bangaru Tirupati, Kolar. Former President, Research Club, Department of Commerce, Bangalore University. Mr. Manjunath N had persuaded MCom, NET JR, CA IPCC, and
Hello. Hello, ma'am.
research accounting.
Yes.
In 2018 and 19, he was awarded the best research papers in the streams of goods and service tax and higher education. Also presented 29 research papers in various streams in both national and international conferences and published the same in national and international journals. He also co-authored for the books on business taxation and goods and service tax for 5th and 6th semester BCom, Bangalore University. I heartily welcome you for session, sir. Thank you.
Thank you, madam.
Thank you, Rashmi Madam, for the introduction. Before we get started, if you have any queries during the session, drop the same in the chat box. We'll bring them up in the Q&A session at the end of the session. Now, without further ado, we'll turn the time over to our speaker of the day.
Sir, I'm giving the access, sir. Manjunath, sir.
Yes, sir. Good morning to all. First of all, I thank Principal of Jnana Evening Degree College and all the members of organizing committee of this webinar for giving me an opportunity for me to share my thoughts on the particular topic given. So here, so as my topic, which involves relating to the impact of moratorium on tax system. So this is the 2 days national seminar, the webinar, which is going to be conducted at the Jnana Evening Degree College, Bengaluru. So what is this moratorium is all about? So moratorium is nothing but a legal authorization for debtors to postpone the payment. It is nothing but a suspension of activities where any activities which are not going to be done. This moratorium can be imposed either by the government or by a business. It is nothing but a response to a crisis that disrupts the normal routine because the financial hardship has been faced by the public, the various n number of the people, as this particular pandemic situation enormous, or it has been done with its overall activities, then this moratorium can be lifted. So here the moratorium we can understand as a suspension of activities. It means all the activities in which were going on before this entry of this pandemic, it has been stopped. So due to this moratorium, what was the happen? So that we are going to discuss in the today's the tax system impacts. So what is this relating to? The COVID-19 so and moratorium. Is there any linkage between these two? The major reason or the backbone of the moratorium which is been involved in India, that is due to COVID-19. So this COVID-19 has taken place is in the particular has a pandemic all across the globe. The borrowers have faced the lack of liquidity. They doesn't have money to repay. So as the loans taken by them, so they doesn't have any liquidity to repay them. Here, to suppress this particular spread of the COVID-19, the RBI, that is the Central Apex Bank of India, so in March 27, 2020, allowed financial institutions and banks to give the 3 months credit, that is the moratorium period of 90 days, that is 3 months, which is going to given the extension for the payment of term loans, the credit card bills and other the EMIs. So yesterday in the Swaminath sir session, sir has explained with how the financial market has been impacted due to this moratorium. So I will not be dealing much of the financial aspects in this particular thing. So I am going to task are relating to only how it has been affected with the tax system. So here this moratorium is not a waiver, it is just a temporary action. So because whatever the EMI or whatever the moratorium time has been given, we cannot able to stop it. At the future time we need compulsory we need to pay. So it is just a temporary action which the government has taken. It is not the solution for the whatever the problems which this pandemic has given us. So here the tax system in India, there are two types of taxes which is levied by the government. One is direct taxes, another one is indirect taxes. In the direct taxes, the income tax, earlier the wealth tax was applicable, the gift tax was applicable, those have been abolished now. Now in the direct taxes, the may only applicable tax is income tax. And in the indirect taxes, all the indirect taxes they have subsumed in the year 2017 and made a one tax called nationwide single tax, that is goods and services tax. And the earlier of the customs duty is going to be continued. So this is the tax system which was prevailing in India. Now, who are the parties involved in this? So there are two parties involved. One is the government, other one is the taxpayers, or in the tax system we'll call assessee. Government, what the government is to do? Here the assessee has to compulsorily pay the tax. It is in this image we can see, even if it does not like to pay the tax, the government is going to take up the money or whatever the income relating to as a tax. So like the government is going to levy the taxes, and the taxpayers, the assessees, they have to compulsorily they have to pay the taxes. So here what we need to do in the tax system, we need to comply. So tax compliance is very important aspect in the taxation. What is this tax compliance? The filing required tax norms on time. So we have to file whatever the required tax forms, the return of incomes or whatever the return of the statements, whether it might be in the indirect taxes or it might be in the direct taxes. And we have to report the complete and accurate information. It is not the incomplete information or it is not the inaccurate. We have to give the exact figures, the accurate data we need to submit for the departments. Paying and the amounts due in timely manner. So the due dates are given in the taxation system. We have to repay within the due date, whatever the dates mentioned or whatever the time period of which is given by the government. So the tax compliance, when in the 2018, as per the CBDT data, 11.6% is the only the compliance. Earlier it was 8%, and in the 2018 it has been increased to 11.6%. That is the tax compliance. So we being the public and the assessee, as coming to the income tax or the direct taxes, where the income tax, only a few portion of the people are involved in the payment of taxes. Even the large population, all the population of the country are not under the tax bracket of income tax. So that is the compliance is very low when we compare to the population of our country. Now, so coming to the impact of this moratorium on tax system. So here the first I'm going to discuss about the tax system impact on the various sectors. So here various sectors where the income tax is a direct tax, when we individually the company, the firm or the various capacities in the person, the income tax is going to be leviable. So briefly I will tell about relating to what is the impact on income tax. So income tax, the assessment year, the previous year is 2019-20. The assessment year is 2020-21. So as the particular this moratorium has been done in the March, relating to March and May. Due to the lockdown activities in the March, by this time all the persons in the assessee, they have already paid the advance taxes, the TDS, whatever the amount they have been deducted at source, the tax collection as those. So all those things have been already deposited to the government treasury. So it has not impacted much on that compared to the income tax, but it has severely impacted. It has severely given repercussion in the relating to the indirect tax system. That is majorly we can say goods and services tax. So we will see in this what are all the impacts of this moratorium on the various sectors in relating to the indirect taxes, that is the goods and services tax. So first, the Indian rail system. The Indian railway system is the fourth largest in the world. So as we majority, we depend upon the trains, that what is the railway facility which they are going to provide. Approximately 70,000 kilometers length which this particular Indian railways is having, and an average it earns 157 crores per day. The revenue to the railway department, it is 157 crores per day. And on the GST, when from the 1st July 2017, the GST has been implemented on the services provided by railway department, the GST is going to be applicable. So on an average per day, the GST revenue to the railways is 7.86 crores. When this particular railway itself is stopped, no passenger movement from one side to another side, the approximate the revenue per day 7.8 crores as lost. And during this particular the lockdown period of from February to March up to April 14, 31.86 crores of GST loss occurred in the Indian government, because only the luggage carrier was, the trains were only moved, so passenger carrying trains were not moved. So in this the railway system has with the lot of implication relating to the due to the moratorium. Here we can see when the passengers are not moving from one place to another place, while moving they will have the food. So in the train, they will, food is going to be provided. So on the food, the services, even the GST is going to be leviable. So whenever there is no movement of the people from one place to another place, the ticket booking or whatever the services provided by the railway, the taxes have been no revenue to the government. Here it is in the relating to the Indian railway system. The e-commerce industry. So in India, the e-commerce system, the industry is the second largest in the world. So India is the second largest in internet user base, having the 627 million internet users across the country. So as the internet usage has been increased day by day due to the information technology, the revolution which has taken place in India. Gradually, it is increasing by 6 million every month. So the e-commerce business platforms like Flipkart, Amazon, eBay, and Paytm, and so many other e-commerce business industry platforms, which was having the approximately 300 crore per day sales were happening in these particular platforms. Due to the stoppage of the delivery of all the lockdown period, there is no movement of any vehicles or any goods from one place to another place. So per day, approximately 300 crores turnover has been affected during this nationwide the lockdown due to the particular COVID-19 lockdown situation. And the average rate of GST which was applicable on these varieties of the products, henceforth it is 18%. The GST collection has been reduced by 50 crores per day. 54 crores per day the revenue has been lost to the government. This is in the e-commerce industry. Automobile industry. So automobile industry in India is the fourth largest in the world. So as relating to the vehicles, cars, motorbikes, or any number of the which is running in the spare parts in the automobile industry, it is estimated that the revenue impact will be 11,500 crores to 11,200 crores approximately per month. As per the CGST Act, the 18% GST rate is going to be applicable on all the cars excluding the luxury cars. On the luxury cars, the rate of GST applicable is 40%, including that is 28% is the rate of tax and 12% is the cess rate. Totally 40% is applicable on the luxury cars in India, where the fact that clearly indicate due to this COVID, the moratorium, they will not have much impact on the automobile industry, because whatever the manufactured goods, the vehicles, car or motorbikes which has been in the stock of the companies, whenever the sale has been done, the GST or revenue is going to be come. But in the there is no much impact on relating to the point of view of the assessees. But for the government, there is a reduction. There is no revenue for the government from the automobile industry, because the people, when they doesn't have money for their day-to-day living, where they are going to buy the goods relating to such automotive, that is the luxury cars or any cars which is going to be. So it is the impact on the automobile industry. Information technology and software industry, like in India, that is the IT, information technology industry, just born in the year 1967 in Mumbai through the Tata Group. So it has covered major two activities: information technology and BPO, business process outsourcing. So according to the research says, the equity foundation in the Indian brand equity, 1,14,500 crore per month revenue it has been generated from the information technology segment in the financial year 2018-19. The total 79% of the industry total revenue is generated from the export of the IT services. That is the majorly information technology, the revenue is from the export of IT services. The rest out of this 76% is from the export activity, like in the other rest of the things is from the domestic. Relating to the export activities, where there is no movement, or the if the reduction in the export of the export is zero rated, there is no tax for the export of services or goods. Here, the if the services of the information technology exporters has been reduced or it has been stopped, there is no much impact on the revenue to the government, but there is a impact on the foreign reserves, that is foreign exchange reserve, it is going to be affected. And similarly, in relation to the domestic services, where the per month to rupees 4,950 crore is going to be reduced. That is the revenue loss to the government from the domestic supply of the information technology services. The pharma industry. So in the pharma industry, where the due to this pandemic, so we were the medical or the pharmaceutical industries are the essential services or essential products which has been used. The Indian pharma industry, which supplies 50% of the vaccine globally. So as we have supplied the hydroxychloroquine for the US, the Spain, so many other international countries from the India. So that is, it has given some revenue for the government. As per the records or the research says, the pharmaceutical industry is 12,000 crore per month, and the revenue is from 30,000 crore per month in the domestic, and from the export it is going to earn 12,000 crore per month. As the medicinal or pharma, the drugs are the very essential requirements of a particular human in India. So in the medical or the pharmaceutical industry, as the GST collection is reduced, the huge amount of due to the global pandemic situation. The infrastructure facility. So infrastructure industry, as there is no activity has been carried out. So here the infrastructure covers real estate, the construction of the buildings, roads, or the water sanitation facility. All the infrastructural activities has been stopped. Relating to, there is no new infrastructure activity which has not been undertaken. So due to the pandemic, so all the infrastructure activities have been shut down due to the COVID-19 global pandemic, as the supply of the resources like manpower, the raw material, the consumables has been stopped over a period of time. So it has been adjusted. So as we can see, there is no labor available now, because the labor from the where the requirement of the labor was more, from that particular place the labor has been moved out. Like if you take an example from the Bangalore the n number of the lakhs together people or the laborers, they have been moved from out of the Bangalore to their originating places. This is relating to the infrastructure has been affected. There is no activities and there is no revenue, tax revenue to the government through this infrastructural industry. The transport industry, where we have already seen in the Indian Railways. Indian Railways is one of the major dependent where the people have been dependent on the transport. So here the transport with other road, train, air and water. So as the majority of the population even also depends upon the road transport also, where the 6% of the total GDP, which is contributed by the transport industry, which is majorly dominated by the road transport. As because railways is covering the approximately about 70,000 of the kilometers, but the railway is in the not in the aiming of the more of profit, but they are in the more of in the giving services to the public, where in the other road transport peoples or the units which are involved, they are relating to the motive of the profit. Here that GST, it is applicable at the 5% rate on the services which is leviable in the transport services as the road, where it is relating to the 1st July of 2019, the GST is applicable on the transport industry. And further, when there is no movement of vehicles, the petrochemicals are relating to the high speed diesel, motor spirit or the petroleum product, there was no much usage. Whenever there is no usage of the petrochemical products, in that situation there is no sale of the particular activity and there is no revenue to the government. And this relating to the stoppage of the air flights, that is the domestic air transport has been blocked, and even in the international the air facility is also banned for a certain particular time period by the government. Whenever there is no usage of the particular when there is no movement of the like relating to the flights, in that situation the ATF, air turbine fuel, it is very costlier, but now it has become very cheaper because there is no demand at all. So petrochemical, that is the petroleum products, are the highest tax which is levied across the world, which is in India. We will see further relating to the petroleum products in detail the further. The textile industry, the textile is very necessity for human life. Approximately 4.5 crore people employed in the textile and the garment industry across the country, and majority the revenue come from the export of the textile, where the foreign exchange reserves are main repercussion in the textile industry. This textile industry contributes to 2% for the GDP of the country, and as the tax, it is going to be 5% and the 12% rate of GST is going to be applicable. Due to the stopping of activities, the moratorium, there is no sale or there is no supply of the, or there is no movement of the textiles from one place to or one person to another person, the revenue, there is no activity, there is no revenue to the government. So it has been made the revenue loss to the Indian government in the relating to the GST. The restaurant business. So we, the Indians, love the food. It is necessary to have the food alive, but it's quite luxurious to have food in the particular of the restaurant, where the food we Indians like the food, like relating to the Pizza Hut, the Domino's, KFC, McDonald's, the Coffee Day, Sunkel. So as a research from the NRAI, the food service report of 2019, rupees 18,000 crores tax paid by the Indian food industry. That is relating to out of this 18,000, the 50 crore tax is paid by the restaurant service provider. Like as we, the younger generation prefers more on the Pizza Hut or the Domino's or the KFC, McDonald's or the Cafe Coffee Day, such restaurants. So there was a lot of service and the service taxes which has been revenue to the government. So these have been shut down during this particular period. There is no activities which are involved, hence there is huge loss for the government from this restaurant business. So what were the measures? So these the impact on the various sectors we have been discussed with relation to what are how this moratorium has given impact. So the government was not quite, it has taken several measures to safeguard the Indian economy from this pandemic. So this economical measures which has been considered, where we are going to see in the two perspective. One is what are the measures taken by the government in relation to the direct taxes and in relation to the indirect taxes, that is GST and custom duty. So as we know, the economic package which is introduced by the Union Finance Minister Mati Nirmala Sitharaman with under the guidance or the chairmanship of the Sri Prime Minister Modi ji. So Atmanirbhar Bharat. So it has been the quote given by the Prime Minister Narendra Modi ji. So as the economic package will see relating to the direct taxes. The direct taxes, what we need to do, we being the public, the assessees in the tax structure, the government has given certain due dates. We have to file compulsorily, we have to pay the amount of taxes to the government, we have to file the returns of income on or before the due date. If it does not comply with the tax provision, then we are going to leviable of the penalty, or we are going to apply with relation to the interest, the penal, we have to be penalized. So here relating to the income tax, coming to the part of, so the previous year 2019-20, the assessment year 2020-21. Whatever the incomes earned during the previous year 2019-20, we have to pay the taxes in the assessment year 2020-21. The due date for filing the return of income was 31st July. It will be usually the 31st July of the assessment year for the non-tax audit persons. For the tax audit person, it is 30th September of the assessment year. So we'll see particularly what the government measures have been taken. Here the government intention is to provide the liquidity to the public, that is the assessee, as we see in the tax perspective. If the people doesn't have money, they cannot able to have access to the food materials or the day-to-day lively activities, which is very requirement. Where the government intention is to, instead of taking money from the public as a form of tax, it is giving some time, or it is also extending the moratorium period, like which has been EMI postponement. Even in the taxes also, the government is saying we will collect the tax, but wait for some time. That is the time deadline they are going to extend. What are the time which they have been extended? We'll see relating to the current previous year 2019-20 in the little bit later. Now as we're relating to the belated return, so we are going 1 year behind the previous year 2018-19. The previous year returns of the 2018-19 must have been filed on or before the 31st July of 2019. So in the last year, it has been extended up to the 31st August of the 2019. If the returns have been not filed with the particular 2019, then that was the due date was 31st March. It means the end of the assessment year. That is for the previous year 2018-19, the assessment year will be 2019-20. So within before, on or before 31st March 2020, the return of income of the previous year 2018-19 would have been filed. So now due to this moratorium, due to this pandemic, so this 31st March 2020 has been extended up to 30th June 2020. So this return for the year 2018-19, so now the regular return cannot be filed. We can file only the belated return. So what is belated return? So if we do not comply with the due dates, or if we do not file the return of income on or before the due date which is given, that is called the regular return. If we do not file, if we file after the due date, that is called belated return. So for the previous year 2018-19, the belated return can be filed. The earlier the due date was 31st March 2020, generally it will be the end of the assessment year, that is 2019-20. Last date of this particular is 31st March 2020. So now this time has been extended up to 3 months. That is 3 months moratorium period has been given by the government of India. Now, this is for relating to belated income tax return of the year 2018-19. Whereas the revised return, so belated return earlier, it could not be revised. From the year 2017, even in some situation, the belated return can also be revised. Here, the revised income tax return, whatever the returns which are filed in the regular before the due date, those returns can be revised. For revising such return of the previous year 2018-19, the due date was 31st March 2020. Now it has been extended up to 30th June 2020. This is in relation to the extension of the tax return for the previous year 2018-19. We were 1 year before of the current previous year. Now, the government was taking lot of measures. It was giving with the lot of advertisement to link the Aadhaar, our Aadhaar with the PAN, that is permanent account number. So even in the lot of situation, the government has given with the 3 months time, it has been extended. It has said July of 2019 was the last, and they are given extended again up to December, and finally again they have been extended up to 31st March 2020. Due to this pandemic, even this linking of Aadhaar with the permanent account number, it has been extended up to 30th June 2020. So I request all the participants to check on this. So if your people, either of your family members or your friends, or inform to your students to take care of this, their families, to link their Aadhaar with the permanent account number. Because if they does not link with this, they can't able to furnish their return of income, and even the PAN will be invalid. So in order to avoid that, it is necessary to link the Aadhaar with the permanent account number. So this is the extension which has been taken place, and the relief has been given with relating to the payment of taxes. As I said, the government is making the liquidity within the hands of the public, that is liquidity in the hands of the assessees. So earlier, if it does not file the taxes returns, or if it does not pay the taxes, there was the applicability of the interest. That is, we can say it is relating to the levy of the penal provisions. So earlier, this particular interest was 1.5% per month. Per annum, it comes to 18%. We have to pay the 18% interest on the the tax if we do not pay within the due date. So this rate of interest has been reduced from 1.5% to 0.75%. That is, per annum it has been reduced to 9%. Now the rate of interest which is levied on the default, which has been earlier was 18%, now it has been reduced to 9%. And it has made which time it has to be payable. It has to be payable between the 20th March 2020 and up to 30th June 2020. The following payments. What are those following payments? Here the payments of advance tax. So each and every assessee, they has to pay advance tax to the government in the 4 installments. So if any assessee fails to do the advance tax payment on or before the particular installment which has been given, then in that situation there will be leviability of the interest. So such advance tax default under section 234B and 234C. So this rate of interest was 18% earlier per annum. Now it has been reduced to 9% per annum. And the self-assessment tax. So we, at the end of the previous year, we assess the total income, the tax liability. So whatever the tax balance has to be payable to the government, we have to pay and file our return of income. So that was applicable, the regular tax, and TDS. That is, we will say taxes withheld. It is nothing but tax deducted at source and tax collection at source. The equalization levy, the securities transaction tax, once the transactions relating to the securities in a recognized stock exchange, there is leviability of the securities transaction tax, we can call STT. The commodities transaction tax, the penalty and late fees in the relation to year. What is the late fee? So you all may have been observed from the earlier last assessment year, If we do not file our return of income on or before the due date, rupees 5,000 was the penalty, that is for the late fees which has been levied. Up to, it can be extended up to rupees 10,000. So as of now, the late fees in relation to the above payments are to be waived off. There is no penalty and there is no late fees in this particular situation of the payments, where the advance tax payment, self-assessment tax, regular tax, TDS or TCS, STT, commodity transaction tax, and equalization levy, the removal or waiving of the penalty and late fees in the such payments to the government. And they extended the compliance dates. So as I said in the earlier, we being the public, that is the assessee in the tax perspective, we have to comply with the tax rules, or we have to comply with the rules or regulation which has been given by the government and the regulatory authorities in the tax system. In respect of this particular, the dates, it was due date was 20th March and 28th June. The revised date will is 30th June. In this particular, so these are the activities from the departments, that is income tax department or the indirect taxes department, the GSTO, the LGSTO, or might be the GST offices. Issue of notices to the people who has not filed their return of income, intimation, notification, any approval of order, the sanction order, the filing of appeal, furnishing of written statements, application reports or any other documents, completion of proceedings by the authority, any compliance by the taxpayer, including the investment in saving. So these compliances due dates has been, earlier it was up to the 20th March. Now the date has been revised and it is, the due date shall be the June 30th of 2020. The compliance date, in order to, because the public or the assessee doesn't have money, liquidity, the cash crunches, they have been, they doesn't have cash to, the liquidity position is worst, they doesn't have money to repay. That situation, the government is also extending the moratorium period for the payment of taxes by extending the due dates. And this was the scheme, earlier it was implemented in the last. The Direct Tax Vivad Se Vishwas Act 2020. So what is Vivad? Vivad means we can have some disputes. So we have been, so Mr. X has claimed sum of expenses, the government or the income tax department has not allowed. So there is some dispute between the Mr. X and the income tax department. So that in order to settle such type of the activities, Vivad Se Vishwas Act has been enacted. So which is attracting the timeline for the payment of this particular disputed areas without additional the 10% of the amount under this particular Vivad Se Vishwas Act, which has been extended up to June 30th, 2020. Earlier this, it means one-time settlement. We can say we are not going to pay any extra amount. One-time settlement we are going to pay, that is under the Vivad Se Vishwas Act. So this additional 10% amount we have to pay under this particular scheme. So the earlier due date for this particular was 31st March 2020. Now this due date has been extended up to 30th June 2020. So we can say the 3 months moratorium time period has been given by the government of India under Vivad Se Vishwas Act. Now, with relation to the investment, we very importantly, we all think our investment plans which are in the tax saving schemes. So earlier, if you want to claim any deductions under the chapter 6A, that is under section 80C to 80U, we have to make the payments on or before the last date of the previous year. Now I am coming to the current previous year 2019-20. If I want to get any deductions under section 80C to 80U, I need to make all the payments on or before 31st March 2020. So this particular, as being the lockdown activities, there is no revenue to the people, and where the salaried people are getting salary, even the salaried people. So the majority of the industries or majority of the certificate employers, they are not given salary because it will be a lot of various factors. So the salary income has been reduced. There is no income for the company, why there is no sale, there is no activities which has been taken place, And such situation, if you want to claim any deduction or any exemption or any allowances, we need to pay our payments on or before 31st March 2020. Now this date has been extended. So where in such type of making of investment, deposit, payment, acquisition of any asset, purchase of any asset, construction, or such other action by whatever name called. Why? Because to claim any deduction or any exemption or any allowances under the provisions of the Act, under the capital gain, the exemptions are claimed under section 54 and the 54 GB, and we individual majorly concentrate on the ATC deductions. Maximum 1,50,000 deduction, we will be involved, or we will be very much to know how much is my deduction, whether can I get full amount of 1,50,000 or including the NPS 80 CCD 1B 2 lakhs. Here we need to make the payment on or before the last date of the previous year, that is 31st March 2020. Now, and such other provision of the government as may be notified, this has been extended up to the 30th June 2020. So here also the government has given 3 months moratorium period for the investments in the various new assets or investment in tax saving schemes or deposits in order to claim the deduction exemption. For as we being the individual, we are very much certain concentrated on our investment plans in order to claim the deduction. In the as the new taxation system which has been introduced in the Finance Act 2020, so there are two options for the taxpayers, either to go for new tax system or either to go for old tax system. Only in the old tax system we can claim this particular deduction. As the 2019-20, we need to pay and we need to file the tax return on or before 31st July 2020. I'll coming to this particular point little later. So as this particular time has been extended up to 30th June 2020. What are the provision they made for new entity in the special economic zones? Beginning of the manufacturing, or in order to promote the manufacturing activities, the manufacture or the production of articles which are specified under the section 10 AA, where in the relating to special economic zone it has been issued. Earlier it was 31st March 2020. Now this particular date has been extended up to 30th June 2020. Here also we can say 3 months moratorium period has been given. What are the other benefits which have been given for the newly set up industry in the SEZ? Duty-free import. There is no duty payable by such type of the industries whenever they are going to import any requirement, the materials or the services from the foreign country. And the domestic procurement also for the development or operation and maintenance. Even on the case of the import, even in the case of the domestic procurement, there is no duty. Duty here refers to the tax. And whatever the profits earned by such type of the industries, the special economic zone companies, 100% exemption in income tax for the first 5 years it is going to be given, and the further 50% is for the next 5 years, and thereafter 50% for the export profit reinvested in the business. If they invest whatever the profit, export profit in the same business activity, even on such also 50% of the tax benefit is going to be given. And exemption from the goods and services tax. So on the supply of goods, there is no levy of GST, as the IGST is zero rated, it is nil for the supply to special economic zone. There is no GST is applicable. The single window clearance for all state and federal government approvals, they have been created with the single window clearances, where if the industry or a particular company wants to start their business activity in any country, it is going to provide with the all the permissions will be given. And exemption in electricity duty and the tax on sale of electricity by various states in the certain states in India. The presence of the customs officer in a particular special economic zone unit, a custom officer is going to be deployed. These in order to facilitate the particular processes. And some states also offer land, like for the promotion of the manufacturing activity. Even some certain, the few states have given the land, free land, or at the concessional rate they have provided the land for the development of the industry. This is relating to the special economic zone. So as we at the end of the year we want to claim some deduction, we will be thinking so where to invest or where to do some social service activities. Now this particular PM Cares Fund has been set up by the government of India in order to face or in order to fight against the COVID-19, this pandemic. So the government needs huge financial support. We being the nation part and parcel of the nation, that is the major revenue to the government is from tax revenue, and the people who have money they can contribute for the PM Cares. The PM Cares, Prime Minister Citizen Assistance and Relief in Emergency Situations Fund. So whatever the amount which we are going to donate for this PM Care Fund, we can get the 100% deduction under section 80G without limit. Whatever, if we give 100 rupees, no, without limit 100 rupees we are going to get the deduction. If we give 1 crore or the Tata has given, if the Infosys Foundation has given with lot of funds for the PM case, and such fund which has been given, we will get the deduction under section 80G 100% without any limit. Further, such income will be exempted in the hands of the recipient under section 10 subsection 23RC of the Income Tax Act. It is one of the important measure that is relating to donation which the government has taken place. The expeding pending of the income tax refund. So we would have already filed our return of income of the year 2018-19. We are waiting for the refund. The income tax department has to process. It has to check our return of income. It has to verify whatever the details we have furnished, and the department has to release the refund. Now the government has given clear instruction to do immediately. The government has directions to immediately clear or issue all the pending income tax refund up to rupees 5 lakhs. So our money which has been in the hands of the government, we were not received because the excess of taxes has been paid due to the TDS or the advance tax which has been paid or later reduction in the some income. So this TDS, whatever the advance, the refund we need to receive up to rupees 5 lakh, the government has given immediate relief. I think by this time the government has already given refunds to the eligible assessees. The relief in respect of GAR and the tax audit report. GAR is nothing but general anti-avoidance rules. This particular, the anti-avoidance rules of relating to, in order to avoid the tax payment, this particular earlier GAR provision, in order to come and prevent this, the tax evasion, GAR provision has been introduced. So this GAR and GST under the tax audit report has been kept in abeyance. It means been kept in the suspension till March 31st of 2021. So up to the next, that is the March 31st, 2021, this GAR provisions under the tax audit report and the way in the GST is in the suspension. They are not going to be applicable. The relief in case of residential status. So as we being the taxation, the residential status is very crucial. Whatever the incomes earned by an assessee in the globe or in the foreign country, whether we need to pay the tax or not, all the residents has to compulsorily pay the tax on global income. So as I take the example of individual, resident and ordinarily resident, he has to pay the tax on his global income. Whether he earn incomes in India or incomes outside India, he has to compulsorily pay the taxes in India. That is, we'll call global income. Take for example, Mr. X, he is a citizen of India. Majority of the days in the previous year, he was outside the country. So as we know, the basic condition, he should be in India for a period of 60 days or in period of 182 days during the relevant previous year in order to say he is a resident. He has come to India earlier. Without of this pandemic, the activities, he was outside India, involved in his activities. But now with relation to, due to the cancellation or due to lockdown across the globe, the various countries, he has come to the India. Now in this situation, so is staying in India only, he crosses the 60 days in the previous year, or he crosses 182 days in the previous year. In such situation, he becomes resident. So once he becomes resident, he has to pay the taxes on his global income. Now, in this situation, the government has given relaxation. What relaxation has been given? The conditions have been relaxed. The prolonged period of stay of individual who have come to India on a visit is to be excluded in certain situations. Now, sorry. Further, a clarification excluding the period of stay of individual up to the date of normalization on the international flights operation for determination of the residency status for the previous year 2020-21 to be issued after the normalization. It means the whatever the number of days he has come on a visit is to be excluded in calculating the residential status of an individual. And once the international flights have been resumed and the situation has come to the normal, then this particular further guidance is going to be issued by the income tax department. That is might be the CBDT. This is with relation to the residential status. Now, the government has taken a lot of measure to provide the liquidity. So it has been given to issue all the refunds to the charitable trust. The non-corporate business entities shall be issued immediately. We see. And now very importantly, relating to current financial year, that is the previous year 2019-20, we have to file our return of income on or before 31st July 2020. So this was the earlier due date for filing the return of income. And in case of tax audit, it was up to 30th September 2020, and in certain situation it was the October. Now, so this particular filing return of income 31st July 2020 has been extended up to 30th November 2020. So they have been given further 4 months of moratorium period relating to filing our return of income. That is relating to our return of income. So earlier we need to file our return of income on or before 31st July 2020. Now we will have another 4 months time to up to 30th November 2020 we can file our returns of income. In case of tax audit, it was the 30th September to file the return of income. Now it has been extended up to the 31st October 2020. This is majorly we can say it means up to November we can have the file our return of income. It means for the making the payment of the taxes, the deduction to claim the deduction and exemption, the date has been extended up to only July. That is relating to 30th June 2020. Only for filing the return of income, it has been extended up to 30th November 2020. And with relating to the assessments, what are the date of getting the assessment getting barred on the 30th September 2020 is extended up to 31st December, and those assessments that are getting barred on 31st March 2021 as extended up to 30th September of the 2021. It means assessment will be due date will be given for the completion of the assessment. So which are the assessment which completes or which is going to be barred on 30th September has been extended up to 31st December. As we have seen, Vivad Se Vishwas scheme for making payment without additional amount is extended up to 31st December 2020. As without the 10% additional payment, it has been extended up to 31st December. The disputes, whatever the dispute between assessee and the government, they have to pay the taxes as a one-time settlement. That due date has been extended up to 31st December 2020. The major impact or the major decision with relation to TDS or TCS. There have been reduction. The government has taken policy measure to reduce the rate of reduction. Instead of taking the more money in the form of TDS, so the government is making or thinking just to leave certain liquidity with the public, that is the assessee. What is that policy which has been taken? A 25% reduction in the existing rates of TDS. for a specified non-salary payments which are made to residents. There is a reduction of 25% in the rate of TDS, which are majorly applicable for non-salaried payments. So what are those? Payment of transaction like contracts, subcontracts, the professional fees, interest, the rate of rent, the dividends, commission, brokerage will be eligible for the reduced TDS rates. From when it is going to be applicable or up to the next, from the May 2020 up to the 31st March 2021, this particular reduced TDS rates are going to be applicable. And that is at the end of the financial year 2020-21, the present financial which is ongoing up to the end of the 31st March 2021, these cutoff or reduced TDS rates are applicable. The government estimates that there is a provision, the release of liquidity up to rupees 50,000 crores in the hands of the public, that is the assessee, due to the reduction in the rate of TDS and TCs. This is the major reduction in the TDS. The 25% rate has been reduced. So how it is applicable? Like the TDS on payment of dividend by mutual fund or interest on securities. If we have some small amount of investment, we have been kept in banks in the fixed deposit, or we have invested on some the interest earning bonds likewise. So on such bonds, if the amount of interest is exceeding 10,000, their compulsory application of the TDS is going to be applicable. The rate of TDS on such interest was 10%. The same has been reduced to 7.5%. It means 25% has been reduced from that rate. The TDS on e-commerce participant, that is e-commerce platform, the eBay or the Amazon or the Flipkart, the e-commerce the providers, existing 1% has been reduced to 0.75%. With relation to the contractor and subcontractor of the by a Hindu undivided family HUF or other corporate bodies, it has been reduced from 1.5% to the 0.75%. This is in the reduction of the rates of TDS, that is tax deducted at source on the tax collected at source. We can say tax withheld. So these are the some of the tax provisions or the measures, the economic measures which are being taken in the field of direct taxes. Now we will see the taxation measures which are taken in the indirect taxes, that is in the goods and services tax and the custom duty and other earlier the indirect taxes applicable in some specified products. The CGST Act, that is Central Goods and Services Tax, has been amended. So this Act, CGST Act 2017, so it has been amended by insertion of new section called 168A, which gives powers to the central government on the recommendation of the GST Council. Any decision in relation to the GST, it has to be from the recommendation or it has to be taken place in the GST Council. What power it has been given to the central government to extend the time limit of compliances. So as the particular, the constitution has to give or the legislature has to give the powers to the government to extend any activities or any compliances. As here by insertion of this section 168A in the CGST Act 2017, this section has given powers to the central government to extend the time limit of the compliances in such some emergency situation such as COVID-19, the pandemic. So we'll see what are the due dates which has been extended. And in case of the income tax also, the government has instructed to immediately release the refund. Even in the case of GST, even under custom duty, all the eligible pending refund, they have been dispersed by the government. So this date was given up to 30th April 2020. As we have already passed the 30th April 2020, I hope the government has already given the pending eligible refunds to the eligible assessees. So with this particular provision is to provide the liquidity in the hands of the assessees. As being the business entities, they has to pay salaries to their employees, they has to meet other expenses. In such situation where there is no turnover, where there is no business activity has been taken place, it will be some sort of revenue for the business entities to involve in the payment of salaries, payment of other requirements, or the payment of EMIs in order to avoid the rate of the payment of interest. So this was one of the benefit for the assessees. The temporary suspension of the provision which restricting the claims of input tax credit. So what is input tax credit? In the GST, whatever the earlier taxes which are paid on inputs, that we can claim it as a credit. So in the GSTR 2A, the ITC will call income input tax credit. Earlier, what are the this ITC is given on matching concept. The supplier has to upload his files, the invoices, even the purchaser of the particular goods or services has to upload the returns. It has to match purchases and sales. Only then the input tax credit will be given on the purchases. In such situation where there is a unmatched invoices or unmatched invoices, this input tax credit has been restricted only up to 10% of the matched invoices. Now this has been kept in the suspension. That is, the whatever the 10% restriction on the input tax credit, it has been suspended up to the September 30th of 2020. So this temporary suspension of the ITC, that is input tax credit, is the relaxation. And e-way bill. So if we are any business entity where they are moving a value exceeding 50,000, they have to compulsorily have a bill along with the tax invoice, that is called e-way bill. It is electronic way bill. It is just for the movement of goods from one place to the another place. Take for example, from the place of supplier to the place of the receiver, where during this particular lockdown period due to the pandemic, the government has notified the validity period of the e-way bill expires in dates between 20th March 2020 to 15th April 2020, because this was the lockdown period for the particular first lockdown. Fully the no activity which has been taken place. So the validity ending on these particular dates, which has been extended up to 31st May 2020, because these e-way bills will be having only a validity of the less than 1 week. So any e-way bills which was relating to having expiring in between this date, it has been extended up to 31st May 2020, as we have already passed this particular date. The extension of GST returns filing. As we have seen, income tax return filing, which was extended up to 30th November. In this case of the GST, whatever the assessees in the indirect tax system, they are to levying or the collecting and payment of GST. They are to file their return of income, the GSTR 3B, which is in the monthly returns. For the month of March 2020, April 2020, and May 2020, they would have filed their GSTR 3B. The due date has been extended up to 30th June 2020. It means if they could not able to file earlier any particular like March return, they have to file in April 20th, within on or before 20th April. Like April, they have to file within May 20th. Like now March, April and May, all the 3 months of the returns, GSTR 3B, monthly returns of GST, they can file up to 30th June 2020. And the annual return of the financial year 2018-19. So as the GST is still new, it has come only become 2.5 years, or later might be in this particular July, it comes to the 3 years. Now the annual return of the particular GST has to be payable, that is, it has to be filed. So filing this annual return of 2018-19 financial year, earlier the due date was 31st March 2020. Now it has been extended up to 30th September 2020. So the relaxation has been given. 6 months moratorium time has been given by the government for filing the annual return of the financial year 2018-19. And relief in case given for the payment of taxes, whoever having aggregate annual turnover less than 50 lakhs, no interest or no late fees, no penalty will be charged for such period. And the people who are having more than 50 lakhs the aggregate turnover. Earlier the rate of penalty, that is interest, was 18%. Now it has been reduced to 9%. The 18% per annum, now it has been reduced to 9% per annum. And if we don't pay this particular honor before the 30th June, no late fee or penalty will be charged. In such situation, any tax or any penalty which will be paid in case of the turnover is exceeding 50 lakhs, the due date is 30th before June 2020. If they file or if they make the payment, no late fee or penalty will be applicable. If they do not make the payment, earlier the rate of interest was 18%, now it has been reduced to 9% per annum. The rest provisions in respect of payment of the taxes. So in the GST we have composition scheme. The dealer where their aggregate turnover is less than 1.5 crore, they can go opt for composition scheme. The dealers who are last date making payments in case of the composition dealer, the quarter ending, that is fourth quarter ending on 31st March 2020, that they have to file their return of income, sorry, returns of the GST returns. Such return due date has been extended up to the last week, that is 30th June 2020. 31st March 2020, it has been extended up to 30th June 2020. So in this, the GST Sabka Vishwas scheme shall be without interest till 30th June 2020. Here also the earlier dues, like one-time settlement relating to the without having any penalty, shall be made with the due date to up to 30th June 2020. The extension of compliance dates. So here the government has extended the compliance dates up to 30th June 2020. In case of issue of notice, this is applicable from the end of the department, that is GST department. It might be CGST department or SDST department. Issue of notices, notification, approval order, sanction order, the filing of appeal or furnishing statement, application and other, etc. And the due date, the extension is relating to the composition scheme. If you want to opt for the composition scheme in the current financial year 2020-21, it has been extended up to 30th June 2020. So as being in the beginning of the previous year, that is financial year, April itself, it should have been given. That is within the beginning of the month of the financial year, we have to give our option whether we will be assessed under the composition scheme or under the regular scheme. So now this opting facility from the regular to composition scheme, which has been extended up to 30th June 2020. If you opt for regular scheme, every month you have to file the GST return. If you opt for the composition scheme, quarterly returns has to be payable or it has to be submitted. And there were 24/7 custom clearance till the 30th June 2020. It is in the force. What are the major decisions taken in relation to the customs duty or the customs act? Primarily, the persons who are exporters importing goods under the advanced authorization scheme or EPCG, that is export promotion of capital goods, or EOUs, export oriented units. They were granted exemption from the levy of IGST and the compensation cess up to 31st March 2020. Now this extension has been given, this exemption, they have been extended up to 31st March 2021. That is relating to sorry, this for the EPCG, EOS and the advanced authorization, people who are involved in the export. The exemption of the IGST, levy of IGST and compensation cess was given up to 31st March 2020. Now the same has been extended for a period of 1 year, that is up to 31st March of 2021. The other related, the very important, as we are the corona warriors, as we the medical people, they use the ventilator, the face mask, the surgical masks, the PPE kits, the personal protection equipment, the COVID-19 testing kits, all are the inputs used in the manufacturing of the particular the medical. So there is a relaxation, there is no duty. The exemption from the levy of both basic custom duty and the health cess, health and education cess, or the now the social welfare cess, which is leviable on the import of goods, which has been exempted in the products where the ventilators, the mask, face masks, and surgical masks, the personal PPE kits, which are used in the this particular the COVID pandemic. Now, what are the major revenue the government is earning? The government is earning major revenue on fuel. Now, the India is the world's highest taxes on levying taxes on fuel. That is at the rate of 69%. The highest rate of tax which is paying on the fuel. So in the international market, there is a low demand for the crude oil. Even then, the prices of the crude oil has been reduced. The prices in the petroleum products or on the fuel in India is not reduced by the government, because the levy of higher rates of taxes on the petroleum products or the fuel, as we say. Now the India becomes the first or the highest taxes levy on fuel at the rate of 69%. The excise duty on the petrol per diesel has increased to rupees 13 per liter and rupees 10 per liter with relation to the petrol. And Italy is in the second position. Then France and Germany, which charges 63 and 62%, 53% Spain, and where the US, which is levied only 19% of taxes on fuel. This is the major revenue the government is going to receive. And the another major source of revenue to the government is tax on liquor. So due to this particular pandemic, the activities, the moratorium period, the activities has been shut down. There is no possibility for the liquor shops or the seller of a liquor to sell. The revenue from this particular alcohol sales makes up about 1/4 of the total revenue of the states. Majorly, it earns for both the state and center. It is estimated that the central government is done rupees 2.48 lakhs crores from the particular supply of this the liquor annually. This is the major revenue which the government is earning. And with relating to the Karnataka, in the last year, the liquor sale has been earned 21,400 crores in the last year for the revenue to the state government of Karnataka. And as when the liquor shops have been opened by the government of Karnataka, so we can see in particular one day around 40 crores of rupees has been earned by the government. So such type of the major revenue, how the government is going to take in place its activity, it is through the tax on liquor and the taxes on the fuels, where the petroleum products are not covered under the goods and services tax. Even the earlier the excise duty, the moment of the VAT or other taxes are applicable, those portion will come to the state governments. So through that, the taxes on the liquor, the taxes on fuels, the governments are running. And further, what the plans the government is having? The further plans, the government is thinking about the other option to generate the income. That is, in order to have the revenue collection, the options might be entertaining taxes, the municipal taxes, as it is already in force. They are thinking to increase the rates of taxes, the panchayat cesses, the vehicle registration fees, and property taxes. And there is a suggestion from the particular top in order to reintroduce the wealth tax. Even that is one of the plan which the government is thinking. In order to reintroduce the wealth tax over and above the person who is having the highest net worth, they have to pay a particular portion of the amount as a wealth tax in order to generate the income for the government. This is how the government is going to thinking about how to generate the income. To conclude, in light of the outbreak of this COVID pandemic 19, which has been providing relief from the compliances and statutory relief, it has been given we have to comply with the tax provision and we have to follow the statutory rules or the regulation. Now, this moratorium period has given us a compliance and statutory relief only. It will certainly help the taxpayers and where they navigate these unprecedented times. We can't able, it is an unexpected. While it could have take some time for the economy to grow up, to increase with the GDP, and to recover the and other various economic measures that are taken by the government of India and the various state government. It is expected to bring back the normality or the normalcy in the country. This is how to conclude this pandemic COVID-19. It is not only in the India, it is across the globe, which is giving us all the problem. The economical slowdown, the no revenue or reduction in the gradual, or there is a severe decrease in the particular revenues to the government through the tax revenue. This is where these are the references which have been used for the particular seminar or webinar. So as we come to the end of this particular topic, that is impact of moratorium on tax system. So I hope I have given justice. I have done or discussed with all of you relating to what are all the impact of moratorium on the tax system with relation to the GST or the indirect taxes, and what are the government measures, the economical measures which has been taken in the Atmanirbhar, the Bharat, in the quotation of the Prime Minister Modi ji. And as we compliances, we being the assessees, we have to comply with our the statutory rules or the provision. Okay, the due dates has been extended either for the income tax purpose, the direct taxes as well as the indirect taxes are concerned. The government is giving the providing the liquidity in the hands of the assessees. Okay, this is about the particular impact on the of moratorium on tax system. Thank you. I thank all the participants for your kind listening and patient listening. So if at all, if you have any queries or any question, we can discuss. Thank you. So I have a question. I have paid school tuition fees in the month of April 2020. Can I claim tax exemption for the assessment year 2019-20? So as we are in the last 2019-20 previous year, this fees if you have paid, it should be with relation to the financial, that is previous year 2019-20. But here you have paid the monthly school tuition fees of April 2020. This is not comes under the previous year 2019-20. Anything relating to the financial year 2019-20, only those has been extended up to 30th June. I think in this, the whatever the tuition fees paid in the for the month of April 2020, you can claim in the current assessment year, that is 2020-21 previous year, you can claim it. That is the tuition fees. If it is relating to 2019-20, even if you are paid in the month of April, you can claim it as deduction under section 80C. So any other questions or Nagesh?
Sir, we'll try, sir.
Yes.
So request attendees to, if you have any queries, so you can ask these questions.
Okay. Another question we have. Just wanted to understand more on the benefit given to the salaried people where we are being impacted in salary reduction. Yeah, I agree with this. The majority of the industries have been, there is no activities. Even in case of the way many educational institutions, the salaries has been given lesser amount. That is only 50% of the salaries has been given, or even in certain institutions or in the industries, the salary itself is not given. That situation, the government has not provided any facilities for salaried people, as because this 2019-20 previous year, it has been ended almost, we were at the end of the ending of the previous year. The government has not given much facility for the salaried people, I feel so. Now in this particular previous year 2020-21, the government might give some sort of, because as there is no income at all, there is no tax. Because if you have received the salary income, then you have to pay the taxes. If you have not received the tax income at all, there is no tax. That is. If you have any other questions or any other clarification to be discussed, you can post in the Q&A session or the particular chat box, or I have shared my email ID. So you can send your queries. I'll be happy to share my views on your queries.
Okay, sir.
Okay, sir.
Any other
So
queries?
dear participants, we'll be sharing the sir's mail ID. So you can ask any queries to the mail ID.
Yeah,
Sir
I
will
have
be
one
answering.
question.
Yes.
Can you please share the tax slab for IT return? Okay. Here the tax slab for which year you are asking, madam? Whether you are asking for the previous year 2019-20 or for the previous year 2020-21. So as now we are already finished 2019-20, we have to file our return of income on or before 31st July. Now the same has been extended up to 30th November. The earlier rate of taxes, that is slab rate, it is same up to 5%, that is up to rupees 2,50,000 there is no tax. From 2,50,000 1 to 5 lakh rupees 5%, and from 5 lakh to 10 lakh 20%, and above 10 lakhs it is 30%. This is I'm telling for the normal citizen, that is a assessee aged less than 60 years. And the rebate has been extended. There is no much changes from the previous year 2018-19 to 2019-20. Only the changes is in the increase in the tax rebate. Under section 87A, earlier the tax rebate was 2,500 and the limit they can claim get the relief up to 3,50,000. But the 1920 the same rebate has been increased to rupees 12,500, and the maximum, that is if their total income is less than 5 lakh, only those assessees can get the benefit. Hope I have answered you, madam. That is for normal assessee. Assessees who are aged above 60 years and less than 80 years, that is senior citizen, up to 3 lakhs is a nil. There is no tax payable. All other tax provisions remain same. For a super senior citizen, up to 5 lakh rupees nil. The rebate under section 87A is not applicable for them. 5 lakh to 10 lakh 20%, above 10 lakh it is 30%. And the applicable rate of cesses, that is health and education cess, at the rate of 4%. And surcharge is going to be applicable for individual where their total income exceeding 50 lakhs. This is with relation to the individual tax slab rate for the assessment year 2020-21.
Okay.
So one more question we have, sir.
Yeah, yes.
Yes.
COVID-19 gambling with the taxpayers with respect of tax burden. Could you please justify? Here, the COVID-19, the pandemic, as no one has expected that this type of situation will come. Here, the taxpayers as being the particular of indirect taxes. The indirect taxes, that is GST, has been impacted in severely because there is no revenue for the government. And as we have already done sales of the activities of January, February, March, the March month tax we have to pay to the government. Now we doesn't have money to pay. Sorry. In that situation, it is the pandemic situation is gambling. It is given lot of the trouble to the taxpayer. I agree with that. As the money doesn't have, the people doesn't have the liquidity, the cash crunches are not available. The government is extending the due date to pay the taxes and file the return of income. So how many months we should consider for the income tax calculation for individual assessee if salary is received for the 10 months? Now here usually the 12 months we need to consider, but you have received only salary for the month of 10 months, you consider only 10 months salary and pay the taxes. Other two months which you have not received, it is take it as zero. But here we have to consider as 12 months. But as for the income consideration, how much ever the income you have received, only that you have to consider. What is the approximate percentage of impact of tax collection to the government in the next assessment year? So here we cannot expect what will be the approximate percentage of impact on tax revenue. The tax revenue is a major source for the government, as there is no liquidity in the hands of the people. They doesn't, or they don't have money to pay, even they postpone the payment of taxes. In that situation, there will be, we cannot ensure that, or we cannot say exactly how much it will be the percentage. And if they paid later means, okay, in this particular salary question, if you are paid in the later situation or in the salary income, we can pay the taxes on two methods, receipt or on accrual method. If you are sure that you are going to receive the 2 month salary in the future, that is you are already eligible, that is salary is due to you, but still it has not been received by you. On the basis of the accrual system, you can consider even the 2 months also, and you have to pay the taxes. And this is one option. And other, so this income you would have received in the earlier years, but now you are going to receive. So earlier the tax rates was low, now the tax rates are very high. So in that situation, you can apply or you can get the relief under section 8990, so that relief can be claimed with relation to this particular question.
Okay. I think all the queries has been solved.
Yeah.
Thank you, sir.
One minute.
Really, it
I
was.
hope I have answered all the questions. I hope I have given justice for the time which has been given to me. I thank the principal of Jnana Jyothi Evening Degree College and all the members of organizing committee of this webinar for giving me an opportunity to share my views on the particular topic given. And I thank all the participants for your patient listening. And if at all, if you have any further doubts or the clarification to be required, just mail me. I'm happy to share my views on this. Thank you.
Thank you, sir. Really, it was a fruitful session. I'm sure the participants would have gained insights from the information you shared. The best and the beautiful things in the world cannot be seen or even touched. They must be felt by heart. Thank you is one such prayer among them. Now, I request Mr. Nageshian, Assistant Professor, to render the vote of thanks for the event.
Thank you, sir. Good afternoon to everyone. There is always something to be thankful for. Respected speaker of the day and all the participants, it's my privilege to propose a vote of thanks on this occasion. I, Nageshan, Assistant Professor, Department of Commerce, on behalf of Department, I extend a very hearty vote of thanks to the speakers and attendees of both the days who joined us with their presence and took out valuable time of their busy schedule. Thank you, sir, and thank you, participants. And also, I would like to extend a special thanks to management and academic director for supporting us. And I also wish to express my gratitude to our beloved principal, Professor Ramesh M. Jnana Evening Degree College, for providing encouragement and supporting us. And I am very grateful to thank my fellow colleagues for their support in complete the process of organizing the webinar. So thank you all. So the feedback form and the PPTs of both the sessions and the YouTube link will be shared to your respective email IDs. And e-certificate will be sent to your respective email IDs within 3 to 4 days. Thank you. Have a great day. Thank you, sir.
Thank you.
Sir, end ಮಾಡೋಣ ಸರ್.
Yes, yes.
ಸರ್ ನೀವು end ಮಾಡಿ ಸರ್.
Okay, man. Thank you all.